Hello and welcome to Volatility 411. I'm Kevin Davitt from Cboe Global Markets. Today the S&P 500 is under pressure. The futures are lower by about 20 handles as coronavirus cases re-emerge in places like Germany and South Korea. The futures have traded on either side of the 2900 level. At the moment the market is lower by about 0.6%. That's pushing volatility measures slightly higher and the VIX index is back very near 30. 10-day historical SPX vol is down to about 25%. The large cap index is back up toward the high end of its recent range. I'll be watching the late April highs around 2950 and then the 3000 level to see if perhaps this rally can hit escape velocity. Now on the downside, the 2700 level seems to be like a near-term inflection point, which is about 7% below current trade. The VIX term structure remains very flat across the front 5 expiries. As has been mentioned previous, the October contract kink has re-emerged, which arguably hints at election-related vol, but also the potential for COVID re-emergence late in this calendar year. The May VIX futures, which expire next Wednesday morning, are trading around 30. The standard May 30 straddle is trading around 5, which forecasts a settle somewhere between 25 and 35, but as we all know, straddle prices can and will change. The VIX options trading today, there's been a couple of interesting spreads. The June 67 half calls were traded against the August 85 calls more than 8,000 times. The August calls traded 12 cents over. It also looks like a May 45, 40, 35, 30 put Christmas tree of sorts was traded. So, the VIX broke its second longest ever stretch in backwardation. Realized volatility measures have been contracting. Earnings season is slowing considerably. There will be a CPI number tomorrow and retail sales data later this week. Both will likely be abysmal. Also of note, Fed Chair Powell speaks Wednesday, and that's always worth watching. So, that's your Vol 411 for Monday, May 11th. Thank you very much for tuning in.